All right, so this is my recap of the day and what I could have done better as opposed to what I did. With hindsight being the additional barometer that we can use in this case. So uh, I liked my opening trade, and we're going to go back and look at the trades itself. Wow, the market made a move all the way to R3. Are you kidding me? Wow. See, this is just, it made a bottom. It made a bottom and it went all the way up. So, I mean, there's not much that you can do about that situation when it does something like that. It's going to happen. So let's go back to the lows. Let's go back in time. No. So 6 is 7 my time. So what I'm going to do is let's put a line on when I started kind of paying attention to the market. Now, one of the things I could have done better is I could have taken the S1 here a little bit earlier in the session. And let's go back and look at the 159 bar. So when I opened up the charts, the first thing I did is I recognized where I believe there was going to be some potential to be short above, long above, short below. So what I had initially marked on my charts, and you go back and you'll see this, if you go back and look at the live day trading, what you're going to see is this on the chart. You're going to see the 73 to 50, I think, yeah, 50 mark. So short below 50, long above. So what I'm happy about as my opening trade, I did exactly what I wanted to do. Where I screwed this day, where I screwed the pooch, and where I have to learn to be a little bit better as an overall trader is I know that I want to be long above this area right here. This is where the break started and corresponds with this volume. So if I know I want to be long above this mark, what does the market have to look like for me to say, all right, let's throw in the towel, we're now going long? Because I know I'm not going to catch it at its bottom. It's just not going to be the way that I'm going to be able to handle a trade. Now I could do it on a short side, but on a long side, this was what, and then as the market opens up at the open outcry, now let's go back to the 6 o'clock mark. So here we are at 6, and the market's bottoming out here at 6722. Now this ends up being the low prior to the low that we see posted right here, and which I catch. This is the trade that I catch. This is the cool trade that I actually catch. I get in right in here. Here's where I wait for the 8 o'clock opens, what I did today, and then I caught it right underneath there, and it was one tick short of being a 1P run. 1P was right there at 67.16. Now this ends up right here. Right there is the low of the day. So this move right here is all of the down that was available in the session. Now, a lot of you guys can question my logic. You can question lots of things, but what we can't question is what the market actually did. So right here is the bottom off of that volume bar right there, and this volume bar and say that volume bar. So coming in, if you would have been lucky enough to catch it right here. Now remember, this is the short line, short below and then long above that 73 mark. So fine. If I'd have been lucky enough to catch it here and actually physically run a 1P and then maybe get 5 or 6 ticks out. So best case scenario on opening trade would have been a win, say of 5 to 10 ticks. Let's say. Let's just assume. Let's assume 5. Best case. So best case scenario on opening trade is a +5. Now, highest volume bar is back here with that red at 1:59 a.m. that's posted. And we know this is the level, and then we know kind of what I would tell you is a dead zone. So let's go back and look at this again. So if I want to be long above this and short below, doesn't mean I'm going to catch it right at the right time, and certainly not the first time it comes through do I want to just jump on the bandwagon and go long. But maybe it sets up like something like this over the 200 bar, and then you have an opportunity. I don't know. I haven't really paid much attention to the long side that's over there. We'll look at it in just a few minutes. But what I can tell you, and where I kind of screwed the pooch today, is I got caught in what I'm going to have to start thinking of as a dead zone. So the dead zone today was pretty much this area right here, 73 to 50. Right in this area, the market could have went either way. Could have went up, it could have went down. Now the big question is, which way, right? We could have stopped right there at S1 today, and we could have went back down. Now you can argue all you want, but the market is the ultimate proof. And these kind of days that you see going from the low posted up to an R3 high move are few and far between. You just can't argue that. There's no argument that those are few and far between. But what you can try to decipher out is how you would handle a day like today. So what I'm going to tell you in my thought process is I know I want to be long above that area and I want to be short below this area. So anything above I'd like to be thinking long, and anything below I'd like to be thinking short. So now let's go to where the low actually posts. So the low post here off of this volume. Now the highest volume bar, once again, comes in and it's red. So what that's telling me is that I want to, like I said, I still believe that I want to be short below this mark and long above it. So the questionable area in question, or the questionable area, is in between here. Now in between there today I had 4 trades. And those 4 trades cost me about 32 ticks. Actually they cost me 30, and I took 12 on the last one. I think it cost me 33 ticks. So the 4 trades I had in that zone right here, trying to get positioned, cost me roughly, let's call it 32 ticks. So this is where I won and lost today, right here. I was coming in to that zone up +1. These are the facts. I was up +1 coming into this zone. And I knew I wanted it to trade into this zone, but what I did is I started taking shorts on up here when the market really wanted to do that. And maybe what I should have been paying more attention to is what the market was telling me back here. That a low was posted, and until I see the market give a blue bar volume of equal or greater value, then I need to be thinking in no other direction other than one way, going up. So above that mark, right? All right. Hopefully I beat the dead horse a little bit. So let's go to the low posted. Now this was the 24 low, excuse me. So we had 3 lows in the trading session. We had a 24 low, then we had a 22 low, and then we had a 15 low. So we went down to the low on 3 different occasions. So in actuality, what it pretty much was a triple bottom. So my biggest mistake on the trading day was not recognizing and not giving enough credence to the lows that were posted. That we didn't bust the lows enough to really break through. Now, if we would have went through that 15 mark, let me go. If and buts were candy and nuts and all that horse shit. There's the 22 low. So right here, here's how crazy let's go back here. Here's the woulda, shoulda, coulda. So this low post here, and then we see this. Now, if it would have, let's ignore all this up here, because at that point in time, all this is unknown. You didn't know the market was going to do this. What I assumed the market was going to do was go back up into this area. And I was planning for it, and I was staying away from it. And I think you even see me try to even put a short under that at the 36 level. Right here, when it crossed over this line, is when I should have stopped trying to short the market. At that point, once it crested over the 750 and got up to S1, I had no business trying to short this market until the volume figures would prove that it was ready to be shorted. And that's where I screwed up today. With that being said, if the market, and buts and candy nuts and all that happy horse shit, if that would have been the high of this swing and then went back through and down here, most likely we were going to go make new lows. So right here is the gold star area. So perhaps the long is at the bottom of the level when it's cresting under the short and the buy zone. I'm not completely sure on that, but today obviously that worked out. If you go back here and look at this mark right here, the 67.50, I don't think we ever saw that for the rest of the day. What we did see was a bunch of areas at the upper band, the 67.73, and it took all of these to break it out. So, I mean, honestly, if I would have been trying to get long, say right here where this mark was right here, then there was a bunch of different trades. There was this one here that would lose, and then this one right here may or may not lost, probably lost, and then this one would have been the winner. but it came all the way back down here. So honestly, what I want to really talk about was why this and this was the low, and it pretty much I should have paid and gave it more. I should have given this triple bottom more importance. So when I say I lost today, what I lost today because the lows posted were 24, 22, and 17. There was only a touchdown difference plus an extra point between these three lows that were posted. So that, in effect, is a triple bottom. And there's your answer. So our long signal with the 200 bar line would have been to get long right there. And that's where I've got to have a lot more homework on my end to recognize the importance of a number, to recognize the importance of a trading. And this is stuff I know. In the back of my head, you know, I'm an excellent trader in hindsight. All of us are. There's not one of us that can look back at a market and say, well, I would have done this. But you really honestly don't know what you would have done in the heat of the market. The heat of the market, and what I'm going to tell you is I didn't give enough credence or enough importance to this level right here. And this is where my mistake comes in, because I don't remember seeing this bottom right here. So if you ask me where my mistake comes, I was coming into that 15 level thinking that was just a double bottom, not a triple. And that's because, well, honestly, to be completely honest, if I had to be completely honest, my alarm was set. I was up, but I was not awake. Meaning I was in front of the charts, but I wasn't awake. I wasn't ready to trade. Not ready. I wasn't mentally ready to be able to trade. And this, more than anything, I think, cost me my trading day. Now, but one of the things I want to take away from today, and not to beat myself up too much on, is that I recognized an area right here in the trading session, right here, that this band of an area was where the decision was going to be made today, based off of that volume bar right there. So to recognize that I knew this, but I didn't know how to trade it. I didn't know how I wanted to trade this knowledge. So my know-how was lacking. And that's because, honestly, I'm trying to relearn how I want to attack the long side of the market. And what I can tell you is I'm close. I've come to conclusions now of what I believe are in importance. And what I'm calling them right now, for lack of a better way of calling it, I'm calling them zones of control. That's what I'm calling my nomenclature right now. What I'm calling this area, an area that I believe has significance, I'm calling it a ZOC, a zone of control. So here was a zone of control, and I'm going to have to really start thinking about this being a dead zone, especially as it relates to, with exceptions of special situations, such as a double crossover. All right, let's go back to the long signal again. Here's your triple bottom. And why at this area was it a valid long signal? Here's our 200 bar coming across the charts. If you know anything about me at all, about the way I like to trade, when I want to go long, I want it to come up over the 200 bar. I would prefer to see it go under the highway again, right here, and then take on a long going above this area. So basically what it's setting up, here's your 0 point, here's your 1, here's your 2, and there's your 3. Or you can look at it differently. If you want to look at it, you're trying to catch this 3 out. So in other words, 0 or 1, 2, 3. Anyway, so regardless, what I'm trying to do is catch this movement coming out of here. What confused me on a long signal was this mark, because I knew that going into this that I was thinking long above. And I believe even in the video I'll talk about being long above. So but one of the things that really cost me this trading day was not paying attention to a triple bottom and seeing all of this. But I knew that I wanted to be long above this mark. So if I would have stayed away from the trade and forced myself not to take any shorts unless it went below here, then you can see that there were no shorting patterns available at all during that time. So what I should have been doing at this point, if I wanted to be long above this mark right there, is only considering long signals. So here's the takeaway. I lose 8 ticks. I'd say I lose 9 ticks on this one. I lose 9 ticks on this one. So I'd be sitting down minus 17. And I wouldn't be taking on any shorts because the shorts were not available. And then this time right here, where I got cranked out of the market, whenever I was shorting here, I should have went long right there. And I should have not taken any of these trades in here. These were mistakes because I was inside that dead zone. And that's the area that I've got to keep myself away from. Because you can see this area, when you go back and look at my trading, day, if you're so inclined to see it and go look, right here to right here, this area right here. So basically from 836 to 903, so this area is where I take my losses. So what is that, 25, 28, 28 minutes. 28 minutes I turned the account from +1 to, and then I ended up going down -45 before I quit today. But this is what I've got to stay away from. So the good news is I see it. I see the area of where I want to stay away from. That's better than I've ever been as far as how I want to take on a long. The only thing that I could have done better as far as taking on this long would have been maybe taking on the long here. If I'd have caught it, would have been to catch it here. In hindsight, that was the place to be. But if I missed it, then it was up here. It was catching it here, and then I think, I don't know where it came down to, with this move here up to R1 and then probably getting knocked out around here. So would I have caught this move from here for the rest of the day? I don't know. So here's a shorting area that I saw, short below. And this one ended up being a break-even trade that I talked about in my video. And then we had the movement, in which I wouldn't have most likely caught any of this after the 11:30 mark. So I'm not concerned with missing the rest of this trading day, because I sucked it up a long time prior to this. This bar right here ends up becoming highest volume bar, by the way. So at the 9:59 mark in the trading session, we went from the red being highest volume bar to the blue being highest volume bar, and that's why you see the lines in the charts right here. So now, once again, I want to be long above, short below. That's why I liked it over there, taking a short on. But I think I was already down 45 ticks at that point. So this was, I looked at it at the practice account and was screwing around in my practice account up here, and I don't believe I videoed that. So it was a break-even trade and a couple losses. So it was just a day that got away from me, period. So I don't know. Maybe I catch that move up to R1 from pivot, going up through there, and I make, maybe +20. Excuse me, maybe I end up with a 2p gain at +33 and taking away 17. I'm thinking my best case scenario today, 2 carry 1 6. It could have been a +16 day for me roughly. So that might have been the best that this day could have offered me personally on a day like today. I don't know. I mean, obviously I like to think that I could have traded better, but as I look back at this day, it was very unusual, and they don't happen very often. So what we had today, as far as things that we had a high red bar volume of 4.8K coming in at 1:59 a.m. Then we have this high blue bar right there at 5.4K at 9:59 roughly. If hindsight's a barometer, what what you can say, I guess, is whoever was buying back there at 2 a.m. sold off at 10 a.m. $64.34, and I think the other level was 68.34, and the other level that when they were selling was roughly 67, and they're buying into it. They're buying at 6773 to 6750. So their average cost on that trade was roughly in that area. And if you average that out, let's say that 68.34, let's see here, 6750 plus 6773 divided by 2. So let's call it 6761. They made out about 4,000 contracts, 4,800 contracts, average profit at about 70 ticks each. Somebody pulled out $280,000 of the market roughly on that movement today. So the know, people in the know, somebody in the know today on the Monday, maybe it's a conglomerate of traders, but they pulled out $500,000 in the market today. That's what you can definitely say that happened. When you look back at the high red versus high blue, and you can see that perhaps they took 4.8, so they took about 600 contracts, 600, and went on the short side at that point, and then probably covered later. Or maybe they ran it down to 68.01, as we would see a little bit, and then covered a little bit in front of this. But what you can definitely say on this trade, from there to there was an interest of where they wanted the market to go to once they were able to get control of it. And that control zone was above the 73 mark, where they were able to not only control it, but pull out $500,000. At least that's how I look at it. And you can see where the majority of that profit target was hit right there. And that was all based upon someone coming in. Now it could have been them clearing out some in here too, though, right? Here's 4,000. They could have taken them out. Who knows? I don't know. I don't know everything. But what I do know is this is the high red bar volume. So we can, this is the sand that's drawn in the sand, excuse me. You can't ignore this. And then you see this right here. So here's your volume bars based upon, if we look back, there's that high red bar, and then these are associated blue bar volumes based off of that red back there. So buying or selling into that, a combination of both. But once it crossed over this level right there, you can see that people wanted the exit. And then, I mean, the shorts wanted the exit, and the longs really took over above that level. 73 up to 29. Was a good 50 tick move available up through there. Then this is highest volume bar. I think one of these ends up being highest. Is this one? 43.97 versus 48.71. No, highest volume bar didn't kick in until 9.59. And there's your short opportunity, short below, and then covering. The market went up to 69.34 today. So the high still holds. A 69.55, but man, this movement through here from 11:30 on, that was some incredible up movement. All right, that's going to do it for me on this recap. I think that I'm learning. It's a matter of trusting what I see and then going from there. So I'm going to leave these on the charts because they're highest. I'm going to leave those on to remind me where they are, and then we'll worry about it on another video. All right, that'll do it for now. Bye now.